a slowdown in housing coming our way. It is Saturday, April 13th, 2019. It's a question that I want to ask. If you've been watching the news on what is happening in this country economically and politically, we know that the central bank has been on a holding pattern since the Trump has the Feds on a tight leash, announcing to hold interest rates at the current level. The economy in the United States is starting to decline very rapidly in many sectors. White House economic advisor Larry Kudlow says he wants the Federal Reserve to immediately cut interest rates by 50 basis points. We're still seeing a decline in the housing market, but it's not happening as fast now since the Feds are reversing and it's going to keep interest rates low. The Case-Shiller report came out with their home price index, and it was expected to show growth, but instead we're seeing that it's continually a slowing housing market. Case-Shiller 20 City Composite grew at just 3.58% year over year in January of 2019, way below the 3.8% expected. So what's happening here? We need to go back to the central bank. They are the ones that pick these 20 cities because they can push the bubble up and make it look like real estate is doing fantastically well. This is what the Feds do to convince hedge funds and investment companies, which all invest in the real estate, to drive prices up. They buy the houses, they rent them out if they can, or keep them empty, but they're told to keep them off the market to drive up the housing prices. The notion is to have less inventory in the market, and the buyers think that the real estate market is still hot in those particular areas. But this is changing as spring sale fever is on, and inventory is growing at a much higher rate now. Even though we see that this is the weakest annual growth since September 2012, decelerating for a 10th month in January 2019, as buyers right now are holding out for more affordable properties if they can. Remember, interest rates have moved up 9 times. It throws a lot of buyers out of the market because they can't simply qualify for a new home mortgage. It seems that the economy is being propped up again. We see it in the stock market. Again, we see it in the real estate market as the bubble gets bigger and bigger. The Trump administration is attempting to hold real estate market from declining as quickly as they need to keep the economy in a steady economic path for the 2020 elections. We see building permits that are dropping very rapidly, and there are many construction job layoffs coming down the pipeline. The central bank may have to lower interest rates again this year to make sure that the economy stays the way it is today. We'll see. I could be wrong. This is going to improve things in the economy, bond the stock market short term, and keep some businesses stay afloat, for example in the retail, housing, and automobile industries. Although all indicators are pointing for an eventual recession coming our way later part of 2020. But right now, the Feds are stabilizing the economy and a fresh infusion of monetary confidence. Be prepared. Tough times are ahead of us. And considering how tense things already are in our country, an economic downturn at this time could ultimately set off a very disturbing chain of events. Let me know what you think on where the economy is going in the housing market in your area. Please comment below and subscribe to the channel. Thanks everyone for watching, and see you next week. Stay safe and keep your head above water.